Thank you for tuning in to another edition of the Vulcan Report. This report will be for Wednesday, September the 1st of 2010. Alright, we're going to start off with Forex this time. The first thing we're taking a look at here is the Australian dollar. And as you can see, we picked up a lot of bot activity in the Forex market, and you can see going back all the way to July the 12th, where we got our first hint that there was some activity in the Australian dollar, that there was some major short operations. The market managed to push higher over the next couple of days. Then we picked up more bot activity on the July the 29th. And then they waited a few days, operated again on August the 3rd, operated again on August the 6th, and then that was it. That was all the market could take. The market then pulled back, and you see them operating again on the way down, which was interesting. On August the 10th, more operating to the downside, and then still operating on August the 25th, and then again on today, August the 31st. So, looks like the Australian dollar is being set up for a collapse back into this bullish Kumo cloud here. So it could fall about 400 pips. So that's what we're looking. We're going to have to watch for that. The Australian dollar is really moving on course, lock and step with the Euro and the S&P 500 and the Dow and the NASDAQ. So if the stock market rolls over, then this should roll over along with it. So that's pretty much it with the Australian dollar. Right now you are looking at a situation where we're still within the weekly pulse wave zone. And so you're going to look at your pulse scan swing VIX, look at your channel and see where you're at. Right now, that's your long above 89.98. Put an order to go long, and you want to go short at 87.70. So we're getting close to the lower end of that price inflection point. So 87.70 should be in play. So I wanted to point that out for you. So to the upside, 89.98. And to the downside, 87.70. All right, taking a look now at the dollar yen forex. I got some questions about that. You know, what did I think? Well, first and foremost, you'll see the bear in the bottom right-hand side of the screen here. So the dollar yen is extremely bearish right now, and you'll also note that it is trading and hitting constantly new lows here. So a nice downward trend. If you take a look at the weekly, I'll give you a little bit better picture here. I'll make this a little bit more so you can see how long this has been going on. You can see that we've been in a nice, well-established downtrend here, after topping out around the 101.45 level. The market tried to consolidate and slow things down a bit, but to no avail. The downward spiral yet continues. So as you can see, it's just down, 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 almost in a straight line. Kind of bearish consolidating here, even though we're still going down here. Here's your channel, here's your breakout, here's your channel. So on the weekly aspect, that's pretty much where you're at. Not a whole lot you can do about it. The market isn't really giving you a whole lot, to work with. We are well below the first pulse wave on the weekly channel, and so we're setting up nicely for the second wave. So let me give you where you're likely going to see price action here. Alright, you got negative momentum on your side, so you're looking for fresh breaks to new lows here. Right now, the 83.59 price level on the on the dollar yen is in play. Again, 83.59 is where you want to sell, and on any reversal plays, you're going to watch reversal momentum, and you want to put your order in to go long at 85.91. Okay, so you're long at 85.91, short at 83.59. Whichever one gets filled first, use the opposite order as your stop loss. That's pretty much how you play this game. Okay. Also notice there have been some bot activity in the yen, some failed intervention, if you will. Japan issued statements that they were going to intervene and do something about this, but really nothing's been done as of yet. Japan is famous, going back decades, for intervening. Okay, you do have governmental intervention into the currency markets. They are famous for that. They can rip your face off at a moment's notice. And as you'll notice here, we've had a lot of the activity. Look at the bots. Pretty much almost every day bot activity, trying to manipulate to the upside or curve the downside risk exposure profile to no avail, only to see new lows. So we don't know if that's just tongue-in-cheek or if they're just trying to make it seem like they're operating. I would say that probably looking at it right now, the downside may be a little limited, but you got to trade what you see. So you got to place both tickets. But just understand too, because we are trend followers and we do trade breakouts, that it is not uncustomary for at the end of a trend for us to get a false breakout and get stopped out and give back the last breakout portion that you gained. But the bottom line is you still walk away with quite a fat lump of cheese. If you've been shorting and following the system from the get-go back here, you're paid. So it doesn't matter if you have to give back a little bit. You still got to take the trade. You know, that's how we make money. So there you have it on the yen. Again, I would go ahead and take advantage of the second pulse wave. Second pulse wave is going along at 85.91, short at 83.59. It's just that simple. You should see that on the printout that I'm going to put on the blog, and you'll be able to download it and study it at your leisure. All right, we got to look at the euro, and you'll see here that the euro is stuck in the cloud right now. Okay, so it's consolidated. Let me blow this up. You can see this a little bit bigger. Here it is here. And by the way, I don't know how to make these HD. Sometimes these, when I upload a video, I guess it automatically makes it an HD type quality video. It's nothing that I'm doing. I have no idea how to do it. If someone can shed some light, then let me know, because I'll make them high quality like that all the time. But anyway, as you can see, the euro is consolidated right now. We're stuck in the cloud. So again, the way you play this based on today's trading activity is this. You place your buy order at 127.78, and you place your sell ticket at 125.86. So you're long at 127.78, looking for a breakout back up to about the 130, and you want to sell it at 125.86 because you're looking for a breakdown back toward the 122 area. Okay, so that's how you play the euro right now. Not a whole lot going on. As you're consolidated in the cloud, you may remain there for a while. You may not get the fills that you're looking for, but just remember the euro is going to move in tandem with the S&P 500. So if the S&P 500 rolls over, then you can expect to get filled on that 125.86. If the S&P gets bullish and wants to break out, then you'll get your fill at the 127.78, and the euro will try to form a double top and get back up somewhere between the 130 and 133 level. All right, so there you have it on your euro. All right, let's take a look now at the S&P 500 futures, the eMini. Just want to pull this up just for a second. I like to look at the futures, and I like to look at the cash index. Just so you know, it's heavily consolidated for the last week. We're doing absolutely nothing but playing the range. We did break out to the downside out of the Kumo cloud, and we are officially in bearish tone right now. Okay, doesn't mean it's going to stay there. It just means that it is. And fundamentally speaking, the fundamentals are negative. They are below your bid to ask ratio. So fundamentals are in line with this bear trend, and prices are in line with the bear trend. The only thing that's missing right now is the negative momentum. So we'll see what happens. But as of right now, as far as you guys who are playing the futures on this, you're looking for breakouts. So you want to go ahead and be long at the 1072.75 level, and you're going to want to sell at the 1037 level. So that's where you are right now. Those are the prices you're watching. So you want to be long. You want to buy at 1072.75 and sell short at 1037. That's what you're looking for here. Chances are, if that 1037 is hit, then we're going to test easily the 999 level. It's going to break into the 999 zone, somewhere 999, 992, somewhere around there, maybe even 989. That's probably where you're at it. So you're going to get a good $30, sorry, not $30, 30-point run there. And for those of you who trade the eMinis, you know 30 points is no laughing matter. So go ahead and take that money, make that $1,500 per contract, and do what you got to do, handle your business. Okay, for those of us that are playing the equity side of things, here's the spider, the SPY. As you see, it's the same setup as your eMini S&P 500. For you, right now, you're going to want to place your orders to go long the spider at 106.97. Those of you who like to play short the spider, you want to sell short at 104.29. Alright, and if the 106.97 is hit, then we're going to probably just lock up inside the cloud above the 108 level. So you want to get $1.52 out of this. You may even be able to squeeze 3 out, and we'll probably test the 109 or even get back up to 110. So we'll see. That could be wishful thinking as we try to fill this gap here. Technically speaking, the gap was filled on this bar here, technically speaking, but it doesn't mean the prices can't try to run back up to here and fall back down again. However, if the 104.29 is triggered, then we pretty much don't have any support. Let me show you what I'm talking about here. As you can see, the next stop is down here at 101. So if you filled at the 104, you know you're looking at $3 in the money coming your way. And then prior to that, when I said there was no support, I mean there's no support. We're going to 80, we're going to 75, and we're not going to get any justice until we see the March 2009 lows, and they probably won't hold. So I'm just saying that's what we're looking at. We're staring into the abyss here, okay? Okay, I would be remiss if I didn't cover the bonds. You guys can give me feedback on these bonds. I'll just tell you my experience. My experience is on the TLT, the bonds here. They're not available for shorting on the short list, and or your broker will probably tell you that they can't locate the shares because this is part of the government program manipulation where they want to keep pumping and artificially propping this market up because they're the ones that's buying, so they don't want you to come in and try to rip their faces off. So the only thing you can do is play the TBT is what you'll be looking. That'd be your best bet. When this thing is ready to blow, the TBT should go ahead and pay you handsomely. We got a lot of gaps on the way up that we need to deal with. Mainly this one here at 102.45. We're going to have to come back down and deal with that sooner or later. So I'll be looking for that. The first thing that's in play, though, is this support, the 107.62 and the 107.40, so somewhere between there. So you're looking at least a $2 pullback initially to test this support level here at the 105.20 level before we get another bounce. So the bonds right now are moving quite handsomely, and they have been only because of government divine intervention, if you will.